look at the time I'm highlighting here. Okay, when you look at charts, here's the actual close of the session. Okay, but I like to see things go to the 4 o'clock hour. But there's always a little bleed over because at 4:15, that's when the closing bell occurs, and I don't have it on the right candle. I apologize. There it is. Okay, so there is the last hour and 15 minutes of trading. Your setup is going to form in the last hour between 3 o'clock and 4 o'clock. If you don't have a setup, okay, if you don't have a setup by 10 minutes to 4, don't do anything. Don't do anything. Just observe it. But generally, you're going to find between 3:15 and 3:45, which would be in New York time on TradingView, which would be 15:15. That is like a little tiny small sweet spot where if I know where I'm looking for liquidity above the marketplace if I'm bullish, below the marketplace if I'm bearish, or if there's an imbalance. What is an imbalance? Something like this. Okay, this is an imbalance, that's an imbalance. What kind of imbalance? Buy side imbalance, sell side inefficiency. Buy side imbalance, sell side inefficiency. Okay, I'm looking for that as a draw on price. It's going to pull it up to get back into one of these areas like it did here, or it's going to go up above an old high. So it's going to go to pools of liquidity above an old high or relative equal highs, or below an old low or relative equal lows, or it's going to go back to an area where it needs to revisit in a sense of repricing for the purpose of rebalancing. And simply because it goes back down in here, that's not rebalanced. It's balancing, but it's rebalanced once you leave it because it then becomes a balanced price range.